It would be great to have someone who could do our work for us, right? Someone to prevent us from making mistakes. Someone to assist with our routine professionally and allow us to devote our time to communicating with our closest people. If only we could get results without wasting our time for nothing. Unfortunately, it's impossible in real life. But wait, Liteforex social trading. Spend your time doing what really matters to you.
Good afternoon, 26th of July 2019, 2:15 p.m. CET, 1:15 p.m. London, 8:15 a.m. Eastern. Piotr here. Good afternoon, good afternoon. We are going to cover USGDP live. Before we start, risk warning as usual, guys. Please bear in mind trading FX on margin, trading crypto on margin carries a high level of risk, may not be suitable for investors who can sustain a loss of some or all initial investment. So please, do not invest the money that you cannot afford to lose. Seek education, gain experience before risking real money. However, past performance doesn't guarantee future results. Alright, before we start, guys, our next meeting is a pre-London Open on the 30th of July at 8 a.m. CET. But the most important thing next week is that we are going to cover what we are going to cover on Wednesday, the last day of the July. At 2 p.m. we are going to cover live Canadian GDP, and then during the second part of the US session we are going to cover live FOMC. More details to come. Okay, looks like there is totally no fear inside the dollar bulls camp. Slowly getting more victims from the short side, slowly to the upside. So actually I think that's the good moment to try to check what is going on. Of course we are going to discuss dollar index chart in details next week when we are going to cover FOMC, because also of the last day of the month. But right now let's have a look what we have. That's the monthly dollar index chart, right? Looks like again we are going to test the open of the November 2016, right? And we had in November 2016 we had the elections, so Trump spiked to the downside, strong move to the upside, attempt to continuation in December, new high in January, then strong sell-off. Right now we are, as you can see, tested these levels already twice. Okay, April and May, pullback in June, so we closed we closed the quarter on the negative side, right? So because it's monthly, right? So if we are trying to imagine how the candle looks like for the second quarter, right? Let's make it a different way. So more or less that was like this. Let's make it red, so falling candle, right? So upper shadow and supply. So right now, what is going right now, If you remember the webinar we held, 3 webinars we held in June. Okay, so I have to do the different way. So that's the previous quarter candle, right? That's the previous quarter candle, right? Now let's have a look how the candle of the first quarter looks like, all right? Something like this. There is a little bit of the lower shadow, but we don't need that right now. Something like here, and it's somewhere here. Oops. And that's gonna be the green one, right? Okay. So as you can see, there is a difference between the high. The higher high was in the second quarter, right? And right now, based on where we are retesting the high of the first quarter, right? So that might be the case. That might be the case in between here and the second quarter high. That from medium to long term perspective, that's the last line in the sand for bears to try to create swing high right now. Otherwise, probably we are going to test this red zone, this supply we discussed some time ago around 100, right? So that's what I was trying to explain, where we are from the higher time frame perspective. So yeah, there is a still chance to create a swing high on the quarterly chart. Now from the monthly perspective, it also might be good because we still have few days left towards the end of the month, right? That we will try to push higher, maybe even we will try to hit some stops, but then we will start to draw the upper shadow, and in that case bears meet the monthly close below the open of June, in that case something around 97.60-65, right? Still possible, right? But on the other hand, bulls are looking for the strongest close. When we are talking about the monthly chart, bulls are looking for the strongest close within this year. I'm talking about not the highest prices, but the strongest close of the month. That's gonna be, looks like, for if that would be today, that would be the strongest close, right, from the beginning of the year. So that's what bulls are looking for. So looks like the June opening level 97.60, as well as this high around 98.40, that's the key psychological levels for both sides, for bulls and bears. So let's have a look what we have from the weekly perspective, especially that we are ending the week today. If you remember, some time ago we were discussing the move back above this rising trend line from the weekly chart. So that suggests it might be, we might see higher levels, and that's what we discussed about these stops here above 98.45, right? And so supply based on the monthly is around 98.50 then, and it's possible to create the upward channel, and so in that case top of that channel is something right now around 100 or a little bit above 100, right? Daily, the important thing from the bulls perspective is that we took out and we are holding after 2 consecutive tests. We are holding above this Niagara Fall over here, so these levels we might see the test of these levels, so something towards 98, 1920 might be in case a little bit later over the course of the day, towards the end of the week. Now, what might be the takeaway from the GDP? I don't know. First, let's have a look what we are going to get, and because of the lower expectations, there is a possible surprise to the upside. it might get a little bit uglier if we are going to get number below expectations. So that might be a little bit uglier from the dollar perspective, but again, market is repricing what was repricing previously. So there is a reprice of the reprice of the previous reprice of the previous reprice. I'm talking about the FOMC expectation in regards to the FOMC 25 or 50 basis, right? The 25 is based on the money market going higher, 50 is going lower, so looks like market already trying to adjust the rest towards the 25 basis point cut. Okay, let's get back to the platform. Something like 3 minutes left. I'm going to watch euro dollar. I'm going to watch dollar yen. Okay. I'm going to watch also DAX. That's what I'm interested in, and especially because of what we had yesterday and day before here. I do expect some similar price action here, so we are going to build the bear flag. All right. I do expect right now, I mean not right now within that particular minute, but the next move I think is gonna be similar to what we've seen yesterday. So it's gonna to be attempt to break and invite the sellers into that bear flag, right? But you know, if you are participating in the webinars, educational webinars in June, you know probably we are going to see this type of the move. But I do also expect a strong counter rally, right? So we are going to hit the first sellers. We are going to hit stops above, and from here something closer to the either double top around the top of this bear flag or some kind of the head and shoulders. I'm talking about the shorter time frame. So that's what I'm looking for. It might happen today. I'm going to monitor carefully, especially that we have a chance. We now trying to reverse on the Nasdaq from 8,000 again, but the Google monster earnings yesterday, so we might see temporarily. But also I do expect that this monster earnings might be a good excuse to try to take some profits. And you may ask, Piotr, what you are talking about? Why do you think it might be like this? Because it's an extremely huge opportunity to try to unload huge amount of the shares if you have it, right? And if you know, if we have a bull market and for the last 10 years everyone is buying Google, so some guys would have a problem under normal market condition to unload the amounts they got. This monster earnings might be, I'm not saying it would be, but you know, I like those contrary theories. So it might be the opportunity to try to unload. Anyway, guys, we are going to watch euro dollar and we are going to watch dollar yen. Good luck to everyone. Let's have a look what we are going to get when we are talking about the GDP reading. So looks like we have this positive surprise. It's not a surprise for me. I told you that I haven't seen the number yet, but based on what we see from the price action perspective, looks like that might be the case. Q2 GDP 2 plus 1, expectations 1.8, last 3.1. So guys, we were just to be perfectly clear, we were talking about this, right? Very low expectations, so there is a huge possibility to see the surprise to the upside. That's what we get. Let me have a look what we have from the PCE perspective. But that's exactly what we are talking about. And okay, so we have this initial reaction. Now we have to be patient, wait and see approach to if, because right now we got the algo, right? Okay, what is PC 1.8 versus 2 point expectations? Previous 1.2, better than expected. Personal saving rate revised to 7.7 from 6.7. Let me get all of those and put into the chat for you. Consumption 4.3 versus 4.0 expectations. It's one of the strongest quarter, looks like it's the strongest quarter for personal consumption in 4.5 years. So that's some stats. Now, of course, it's a better than what market was expecting, but well below the previous one, right? So that's the thing. The same we can talk. We can talk same thing with earnings report in US. Right? Because it looks like market was worried, the expectations were lower, but they were on the lower bottom of the. They were on the bottom of the range, so it was easy to beat. So that's where the manipulation is, guys. And if you don't understand, you have to sometimes read between the lines, right? That's the key in my opinion. GDP price index 2.4, expectations 2.0, not bad here. Hi Spicy, how you doing? Hopefully everything is alright. That's some data. So we have so now let's have a think for a while, because I think from the dollar's perspective it's not that bad. The PCE is soft, but come on, we spending and sales are strong. That's true, but from the baseline, right, the headline 1.8, 2.1, so strong number, one can argue, but it's well below what the White House administration are calling that overall they are going to get easily 3 or above 3%. America great again. So you know, the baseline was set very, very low. So what that was easy. That's what I mentioned before we get the number. That if we are going to get the weaker than what market was expecting, that could create some uncertainty. Might be ugly for dollar, but not this number, right? I think that we are going to have probably, because of the end of the week, some guys have to clear their books ahead of the end of the week. We might see attempt to go lower. We might see attempt to go lower on euro dollar. We might see attempt to go lower on the pound USD. But in case of the dollar rally, probably dollar yen towards 109 eventually. So we might see more stop hunt on euro dollar to the downside, or pound dollar to the downside, on dollar yen to the upside. But I think at some point we are going to see some profit taking ahead of the weekend. But there is no reason, to be honest with you, right now to try to aggressively sell the dollar. I would rather say that it might be. So we hit another demand we discussed on euro dollar from the intraday perspective, based on what we get yesterday when we are talking about the ECB event. You know, we were discussing this morning. I like shorts, but closer to 112. And maybe, just maybe, if we are going to see towards the option expiration, or maybe ahead of the London fixing, or right after the London fixing, if we are going to see the stop hunt below the yesterday low, post ECB low, and we will see some kind of the reverse, that might be the case for me to try to jump. And if I'm going to have, like, I don't know, 6-7 pips stop, I'm going to target something like 1825. Maybe, right? We are not going to get more Friday afternoon, just, you know, that's what we have to understand, right? Nothing for me from the trading perspective right now here. Let's monitor closer. So, you know, the data is completely against market expectations of 50 basis point cut by FOMC next week, right? So that's what we saw yesterday when we saw higher yields and a little bit more sell-off on the stocks indices, and at the same time when one could expect, once we saw falling stocks, that dollar yen is going to fall, and it haven't because of higher yields. So it was some kind of the repricing, what I've been talking earlier. So maybe towards the option expiration, maybe towards London fix. What I would like to see, some cable rally towards Monday low. At the same time, that would be retest of the Tokyo high, some stops hunt to the upside, rejection. I would like to eventually to join this type of the move. What else? Some kind of the rally on euro dollar to try to fade that rally. And that's what we have on DAX here. We are testing this bottom of this possible bear flag. I thought that we are going to break through with quick reverse. We didn't yet. It might be that it's going to happen after the New York Open. So the strong dollar most probably is going to hurt the commodity block. So maybe instead of looking for some kind of the dollar trade, maybe just maybe we should look around and check, let's say, EURUSD, for example, because we are going higher after the ECB yesterday. We are retesting this ECB high. Let's have a look how it looks from the daily chart perspective. We are right at supply right now. So of course it's not a place to try to be right now. Where is some kind of the demand? We have this demand around here. So it might be that we are going to see some kind of the upside downside from here, mostly because of what we have when we are going to try to add the trend line. As you can see, there is a fight, especially that is a third touch. So we might see pullback from here, guys. We might see pullback from here. I'm not gonna be surprised, right? So not in interest right now. What else? So if euro is rising versus pound, so there is no reason to try to check pound Aussie. Actually it is. Actually it is. But we have this swing high over here, so maybe that's the one thing. And to the downside, Wednesday high. That's gonna be all about this daily close today. And in case of deeper pullback, the breakout from this. That's what we lately discussed. Possible over under over here. That's what we held yesterday. You know, this huge consumer spending, it also might be translated. The people are trying to spend their money. No one wants to hold fiat. Yeah, with all this printing around, let's print more. There was a I haven't handy here, but what I saw, maybe you saw as well, the tweet from 2016 from the it was, I think it was ahead of the election or around the election. There was a tweet from Mr. Trump that he's going to get out of the US debt within the 8 years, and this tweet was doing the round today. Yeah, mostly because of this agreement to avoid the government shutdown, so more spending, more printing money. But the dollar yen cannot go higher. That's strange. To be honest with you, we hit stops. So for sure we hit yesterday high, and we should, I thought that we are going, after this we are going to find demand somewhere here, but we are going even below these levels. That might be interesting. This type of the failure might be interesting. But still we have 15 minutes to go towards the top of the hour. So how does it look like from the hourly perspective? Yeah, it's not that great as well. But don't forget what we are talking about, the possible demand. Intraday demand is lower here towards 108.50, 108.40. But I'm a little bit surprised that we didn't hit higher levels yet. Remember what we were discussing this morning, 108.88, 109. But with this number, so what we have, it was based on the monthly chart, right? We are fighting with this February open, and open was 86. So that's the supply, right? That's what we discussed this morning. One more time, what was the supply? 86, and we hit 83 for now. So, you know, we might still try to move a little bit higher, hit those stops. That's what I've mentioned this morning when we were covering pre-London Open at 108.80, 109. That might be the case. So with this a little bit better number, retest of these levels, maybe higher towards 86, and then looking for rejection. We may find some buyers here on this pre-GDP number level. There might be some buyers here. But for sure we have some sellers based on the reaction we've seen. Overall, I did expect more fireworks. There is some news in relation to the Brexit. Merkel did have a phone conversation with Johnson, and she invited him to Berlin, and he accepted the invitation. Okay. Euro is going lower. And testing the block we were discussing yesterday. But the thing is, what I mentioned this morning, we tested this block. I grabbed small longs yesterday to recover the 7 pips loss we had during the ECB yesterday. So this time we might try to break a little bit lower. And in that case, the level related to the monthly chart, the red line here, 11.15, that's also on the 5-minute chart, the latest place where we saw the weakness, right? But overall, what we have after GDP, euro dollar, 12 pips, pound probably a little bit more. Pound did like something like around 20, and dollar yen 15. So that's how Friday afternoon after GDP data looks like. Gold is trying to hold 14.14, and that's what we have based on the daily chart. That's what we discussed. The low from the 18th of July. Looks like we got a little bit lower levels, but the close at or around. We're trying to push higher. The next level of support is the open and the low from the 17th, and we are talking about the 1406, 1400 level. One can argue, Piotr, but it's outside day on gold. It's gonna be confirmed with the close below yesterday low. So that might be something here. Especially there was an attempt to break lower through the line, rejected. So all those sellers are forced to cover right now. I'm just thinking why we are pulling back here on the dollar. So in case of the move below the pre-GDP levels, we might see some more profit taking into the weekend, and we might even went below the daily open. That would be quite negative, especially that the Wednesday high is much lower than 50% of the yesterday range. Just waiting, Steve. I would love to do something, but there is no reason to try to chase the market for me. I would love to do something, but from my perspective, there's nothing to do right now. Just wait and see mode. I'm not gonna chase the market only because we have the light event and we are covering this live, and that, you know, I'm gonna force myself. Oh yeah, you are watching, so I have to do something. No way. If there is no my setup, unfortunately, I can't do anything. There are the days we are doing something like trading like yesterday euro dollar, or like I had a Aussie Kiwi yesterday, right, when we met ahead of the ECB. Then a few days back we had a possibility we were trading, but if there is no setup, there is no reason to try to trap ourselves ahead of the weekend. I'm sorry, Steve, if you are disappointed, but that's not how it works. So slowly, let's try to prepare ourselves for scenario. I'm not sure if you are going to see the rally towards the weekly open, blue dotted line. So that's what we discussed yesterday. That's where I'm going to try to join short side. It's probably not going to happen. So I'm going to watch the levels related to post ECB low. Either it's going to be the stop count, so we might retest 110.80 or 110.60, and if I'm going to see some kind of the reversal, maybe to grab few pips, I'm going to join the party. But with this data, there is actually no reason to try to be against the dollar, especially late Friday when the big guys are going to play their own games. So it's easy to be trapped. Pound 23.80, the 2019 low. That's what bears are going to target. Dollar yen, it's all about this pre-GDP levels. But I do prefer to see retest of the high, maybe 2-3 pips higher towards the February open. That's where the supply probably resides. That's what we discussed, and maybe for a few pips. Not sure if it's not better on Monday. Nothing on Euro Pound side. Pound Aussie. If we are not going to get ultra dovish FOMC, ultra dovish Powell, and probably we are not going to get such a statement and such a comment, that might hurt more commodity blocks. But that might happen Wednesday, Thursday. So watching carefully here. Yesterday, as I mentioned this morning, I closed the longs on Aussie Kiwi with profit. I might try to watch if we are about to close above weekly open. That might be theoretically, from intraday perspective, attempt to see another rally, right? But if we are going to close below this green demand zone, we done, and we are going lower, probably towards 103.50 and below. So probably DAX, that's what I'm gonna to watch this afternoon based on the scenario we discussed. Guys, you can share your view. That's why we have this chat. So if you have idea, Steve, if you have idea, what can we do? What can we check? What should we check? Then go ahead. Chat is yours. But again, we moved on euro dollar something like 12 pips after the data, right? Same dollar yen, a little bit bigger move on the cable. Actually, no moves, right? That's what I wanna say. Actually, no moves. So let's have a look as we have top of the hour, early candle, dodgy. So that's that's the perfect confirmation of what I'm talking about, right? Few stops to the upside, few stops to the downside, ended where we started. Cable. Here we have some kind of the attempt to break lower, but again, here is this manipulation point in play, in my opinion. So bulls need to hold this yellow zone. Bulls need to get back above 24.30, 24.40, and if that happens, eventually we might see activation of this demand again, right? But only above, because right now what we have very narrow, because we have this demand here, and below we have this 2019 low, and right now here on this hourly chart we have immediate supply here, the broken level over here. That's the immediate supply. So that's why we have to close above to try to activate the demand we've seen 2 days ago. Otherwise we might bounce in between 23.80, 24.30. Hi Dixo, how you doing? So let's switch to the dollar index again. There you go. I've got this DXY CFD chart based on the trading view. So here looks like we hit 98, but on the futures market, let's have a look. That's delay. 1 second. Futures. The current one. 97.50, that's what we get. I'm not sure if we are going to get there today. Here around 97.70. I would expect some kind of the supply, especially that we are approaching end of the week. So some guys, I'm not saying we are not gonna make from the intraday perspective, that's just to be perfectly clear, right? We might see another dollar run higher around the European close and or around the second part of the US session after the lunch. We might see another run higher to try to hit more stops, but then I would expect some kind of the light profit taking ahead of the weekend. Some guys have to clear their books ahead of the weekend. Some guys probably they will have to manage the risk. So that's unless we are going to get some kind of the event we are not aware of right now. But if we are slow after GDP, probably we are going to be slow towards the end of the day. We don't have a meeting on Monday, guys, but don't forget, if you are doing a business on spot market, so the spot market is T+2, right? So meaning that if you want to settle some transactions and you want to have some particular currency, you have to do your deal 2 days ahead of the end of the month, mostly in most of the cases, right? Like if you want to have euro or dollar, then you have to do your deal on Monday. So be careful because of the unusual possible moves on Monday around the fix, right? ECB fix, something around the New York Open, something around the London fix. So be careful about that because it's gonna be T+2, right? So not necessarily some guys are going to respect the chart. They're going to make their own businesses ahead of the end of the month, right? So be careful on Monday. Gold, that's what we discussed. Lower shadow, try and go higher. So we hit some stops. Now it's time to hit some stops based on the yesterday high and hit supply. Especially that we have possible over under based on what we seen here when we saw this consolidation phase. Thank you, Dixo. Thank you. Let's have a look if we have some kind of the activity from the President Trump side on Twitter, for example. No, nothing like this. So we got quite good numbers ahead of the FOMC. So even if anyone was thinking still yesterday that we are going to get 50 basis point cut, so there are less and less chances. So let's have a look what we have from the option charts, options traders perspective. The option expiration within the next 50 minutes. Euro dollar 11.30, and we have huge amount in between 11.60 12.20. So the upside, so it's, I would say, a little bit too far. 108, 108, $10 yen above 2 billion. It's a little bit too low in my opinion. 25 on the cable, 1.75 and 50 minutes to go. And we are trying to hold 24. So if we are going to, within the next few minutes, if we are going to jump back above 24.30, 24.40, well, I wouldn't be surprised to see the run towards 24.80. And that's it. So even, guys, you know, if the options traders, right, and we are far away from those expirations. So looks like they are already done for the week. So if the options traders are done for the week, so probably we should be done for the week as well, right? Because trying to chase the prices late Friday during the US session, from the retail trader perspective, usually it's a not good idea. There is no reason we should stay longer. It was like scheduled for 45 minutes. We are already almost 1 hour. No fireworks. I'm sorry. It's not because of me. It's because of the market. Market didn't want to move. We get quite good US data, so we might see some higher high on the dollar index. But I would be very, very careful ahead of the weekend. Some light profit taking possible. Guys, don't be trapped. See you again on Tuesday. As usual, it was my pleasure to be with you here. It's time to recharge our batteries over the weekend, and I promise you, market will be open again late Sunday, early Monday, depends on where you are. Guys, have a beautiful weekend. Take care. Goodbye. See you next week.